What's going on, guys? It's Garrett Fields of Nelson Financial Planning here. So, Thursday of this week, the media's favorite brokerage IPO'd. I'm of course talking about Robinhood, the brokerage that has been sued more times than I care to count. But I did count. It's 49 class action lawsuits this year alone, and we're only in July. So, Robinhood IPO'd. What does that mean, and why is it so special? Let's jump right into it and find out. So what does it mean if a company IPOs? Well, IPO stands for Initial Public Offering. So before a company IPOs, it's privately held by a specific group of investors. And to become one of those investors is difficult / next to impossible to become. But once a company IPOs, it's publicly traded on the stock market. So anyone can open up a brokerage account and buy shares in that company. Just like you can open up a brokerage account and buy shares in Apple, Google, Netflix, now you can open a brokerage account, you can also buy Robinhood. So what does this mean for people that use Robinhood? Well, for right now, not much. Except for the fact that now you can own shares of Robinhood while using Robinhood. So what should we do now that Robinhood's publicly traded? Well, after taking a look at Robinhood's first day on the market, we think that this only strengthens our approach that owning individual stocks just comes with too much risk. Robinhood dropped almost 9% its first day on the market. This is why we like owning funds, not individual stocks that have a long proven track record. So if you want a certified financial fiduciary to look at your portfolio, or you need help setting up an investment account, feel free to slide in our DMs, shoot me an email, or give me a call at 407-629-6477. I'm always here to help. And as always, stay safe, stay healthy, and invest consistently.